If I had to pick just one dividend ETF to buy and hold forever, it would be SCHD. I get asked all the time, what's the best dividend ETF for long-term investing? And after researching countless funds, I keep coming back to one, Schwab's US Dividend Equity ETF, ticker symbol SCHD. Dividend ETFs are great because they offer passive income while providing steady capital appreciation. But not all ETFs are created equal. Some focus too much on high yields, which can lead to unsustainable payouts and underperformance. Others are too diversified, diluting the impact of strong dividend payers. So, how do we determine which one is the best? To avoid common pitfalls, I have three main criteria for selecting a dividend ETF to buy and hold forever. Number 1, strong fundamentals and dividend growth. Number 2, a history of beating or at least matching the S&P 500 in total return. And number 3, a low expense ratio to maximize long-term gains. With that in mind, let's break down SCHD and how it stacks up. SCHD tracks the Dow Jones US Dividend 100 Index, which means it holds 100 high-quality dividend-paying stocks. The fund screens for companies with at least 10 years of consistent dividend payments, strong financial health, and a high return on equity. This ensures that only fundamentally sound companies make it into the ETF. Next, let's talk about performance. Over the last 10 years, SCHD has delivered an annualized return of around 12%, which is comparable to the S&P 500. But there are a few key differences. It does so while providing a dividend yield of about 3.5%, which is significantly higher than the S&P 500's yield of around 1.5%. And when it comes to expenses, SCHD absolutely crushes it. The ETF has an expense ratio of 0.06%, meaning you keep most of your returns over time. For comparison, many actively managed funds charge over 1% in fees, which can erode your gains significantly in the long run. Now let's compare SCHD to other popular dividend ETFs. VYM, Vanguard's High Dividend Yield ETF, has a similar yield but lacks the same level of dividend growth. Meanwhile, DVY, the iShares Select Dividend ETF, has a slightly higher yield but a much higher expense ratio of 0.38%. This makes SCHD the clear winner for long-term investors who want a balance of both growth and income. SCHD isn't just about dividends, it's about total return. With a solid track record, strong dividend growth, and a rock bottom expense ratio, it's one of the best ETFs out there for long-term wealth building. So if I had to pick only one dividend ETF to buy and hold forever, it would be SCHD. But as always, do your own research before investing. If you found this video helpful, be sure to like and subscribe for more ETF breakdowns. Thanks again for watching, and I'll see you in the next one.